in the last 5 years, I've done better than I've ever done in a bad market. You pick quality companies, quality people, quality structures. There's always money to be made in the natural resource sector if you're developing an asset correctly. What's different this time, I believe, is that this bull market is long past due for we've had underinvestment in a lot of the commodities and exploration development. So we're getting that normal bull market that's going to start and last for a while. But what's different this time is the security of supply. I tried to, back in 2009, I financed 3 of the 4 US listed rare earth companies. And the story was the same, that we were depending on the Chinese for these critical metals. And they go into everything from our military to all these different things. And that narrative really caught fire right until the Chinese dropped prices and of the rare earths purposely. And then, of course, the U.S. government wasn't behind those companies, and Western banks couldn't finance those mines because the Chinese had dropped the prices so low, they weren't economic. So everybody forgot about it. But fast forward to this bull market, and you mentioned MP materials, the rare earths, antimony, there's all kinds of them, tungsten, different things that we need are produced by countries that aren't friendly with us. And the European Union's looking at this also, and so is the Canadian government. And what you see is government starting to invest directly in these companies. Like you mentioned, MP Materials. Apple is doing a deal with them. The U.S. government put money in. And the U.S. government's done, I don't know, half a dozen deals at this point. So what you're seeing now is that, and you're starting to see the nuclear, it's always been evident to me that uranium is quite important. But now you're starting to see the U.S. government, even the environmentalists say that, these small reactors. So I think it's different this time because I think you've got people that are outside of our typical resource bull market that are getting into this market.
For disclosure purposes, our site does not make recommendations for purchases or sale of stocks, services, or products. Nothing on our site or this podcast should be construed as an offer or solicitation to buy or sell products or securities. All investing involves risk and possible losses. This podcast is for entertainment purposes only. Jeff, welcome to the show. For anyone that's new to our show or new to the commodities investing, I'd love for you to start off with a little bit about your history of how you got started in the natural resources space.
Oh, that's a long time ago, but thank you for having me. I moved to San Diego probably close to 30 years ago, a little less than that, but went to work for a corporate communications company. I was a partner in it, and actually indirectly Rick Rule was kind of our mentor. So anybody familiar with the natural resource space will recognize the name Rick Rule. So got to learn a lot of things watching him, and have been friends with him over the years. But through the last 25 years, I've kind of migrated. I basically finance natural resource companies, and I have a group of friends that come in with me that are like-minded, that are prepared to give these companies a little more runway than the typical junior resource investor. So, but I've been in all facets of the resource market, from communications to financings to strategic acquisitions, and now I actually act as a large shareholder. A lot of the companies I'm a large shareholder in, I will be a consultant for, to make sure that they're going to raise the right capital in the future from the right people that give us all the best chance of having a success.
So I know I've watched a few of your podcasts, and you started very close around a bull market for commodities then. What are you seeing, or what's different, do you feel, this time? I know, like MP Materials, there's some big players now comparatively. The narrative has changed quite a bit, that everyone feels on board for commodities really going into the future for the energy transition.
Yeah, basically, I've in my 30 years, I like to say I've seen, this will probably be the third one, two, kind of the fourth bull market, I guess. But typically the bull markets, in my opinion, which is just my opinion, always follow a financial correction where people sort of gravitate back to hard assets. So if you look back to the 90s, it was actually before my time because I was in college in 92 when they had the big recession. But I came into this business in 94, and it was an incredible market. I thought I found a broken slot machine. Everything I bought went up. I didn't know it was a bull market, so I learned very quickly after the Brix thing that it's good. And I was lucky enough to take quite a bit of money off the table. But what's different this time, you get a bull market maybe every 10 years. You had the up till 97, then you had the 2000, 2002, 2003 to 2007, and then you had the real estate crisis, and that was really the same bull market. In 09 to 11 was a good market, and we haven't really had a good market a bull market. But again, in the last 5 years, I've done better than I've ever done in a bad market. You pick quality companies, quality people, quality structures. There's always money to be made in the natural resource sector if you're developing an asset correctly. What's different this time, I believe, is that this bull market is long past due for the, we've had underinvestment in a lot of the commodities and exploration development. So we're getting that normal bull market that's going to start and last for a while. But what's different this time is the security of supply. I tried to, back in 2009, I financed 3 of the 4 US listed rare earth companies. And the story was the same, that we were depending on the Chinese for these critical metals. And they go into everything from our military to all these different things. And that narrative really caught fire right until the Chinese dropped prices and of the rare earths purposely. And then of course the US government wasn't behind those companies, and Western banks couldn't finance those mines because the Chinese had dropped the prices so low, they weren't economic. So everybody forgot about it. But fast forward to this bull market, and you mentioned MP materials, the rare earths, antimony, there's all kinds of them, tungsten, different things that we need are produced by countries that aren't friendly with us. And the European Union's looking at this also, and so is the Canadian government. And what you see is government starting to invest directly in these companies. Like you mentioned, MP Materials, Apple is doing a deal with them. The US government put money in, and the US government's done, I don't know, half a dozen deals at this point. So what you're seeing now is that, and you're starting to see the nuclear, it's always been evident to me that uranium is quite important, but now you're starting to see the US government, even the environmentalists say that, these small reactors. So I think it's different this time because I think you've got people that are outside of our typical resource bull market that are getting into this market.
So when I met you at Metals Forum, it felt like everything was at its 52-week high. It was a fantastic time for anyone that already invested, but it's very hard to figure out where to jump in at that point. We've seen a little bit of a correction with gold prices bouncing around, and as you just mentioned, usually commodity bull markets turn out when the rest of the market's not doing the best. As we see this opportunity, possibly for a buying opportunity for investors that maybe hadn't jumped in yet, I love your commentary that all turkeys fly with a
Yeah,
strong wind.
strong wind, all turkeys fly. Yeah.
So what are some of your strategies for investors that are looking, when this next dip is that they're trying to look at new commodity prices or junior mining companies? What are some of the things you recommend so they avoid some of the turkeys maybe?
Yeah, well, like you said, we met sort of, about a month and a half ago, I guess, at this point at the MIF conference, which is a great conference in Vancouver. Well, they have them in other places too, the Metal Investors Forum. I just came back from New Orleans, and this is last week, so people were kind of worried because the market's corrected a little bit. Gold had come down, other commodities had come down, and the stocks had come back 15-20% or whatever after big runs. That's typical in a bull market. Things don't go straight up, so it's very healthy to have those pullbacks. But it made me laugh that people were so concerned in New Orleans that was this the top? No, it's not the top if people are asking if it's the top. So there'll be different legs in this bull market where there's pullbacks. Those are opportunities, but whether it's a bull market or a regular market, I always look for companies that have people that have done something before. They've built a company, they found a mine, they sold a mine, people with a track record. Mostly, sometimes I find someone new that's coming back into the business, and but it's about people. I have to really like the people, and then it's about share structure. You want to see that they've raised money at the right prices with the right people. They have the right shareholders that are going to give them the runway to develop that company. And in a bull market, again, like you said, in a strong wind, all the turkeys fly, and some of the companies that do best. But I want to be in the real deal company that's trying to develop a billion-dollar asset. They're looking for something big or developing something big.
Assuming that most of the following here, as their mining investors, has the patience as a long-term investor and not just looking for short-term wins. What are some of the other things? I 100% agree with share structure. I mean, I'm not a geologist, so I feel like that's my safest bet to start with, and then management after, which kind of feels synonymous, that good management and share structure kind of usually goes well together. But do you follow up then after with like the geology, the jurisdiction? Like what are your follow-up things that are mandatory for you to look at a project?
I have consulting geologists that look at stuff for me, and friends like Brent Cook, who's an excellent geologist, and Joe Mazumdar, who writes a Exploration Insights newsletter. These guys are friends of mine. I often bounce things off of them. I also have a part-time geologist that's great that looks at stuff. But again, at the end of the day, if I have the share structure, and I can give you examples, but if the CEO and president is a geologist and he's made discoveries before, and he's a reporting insider that owns 20-30% of the company, or his group does, I'm pretty sure that they're not going to make money if they don't turn the asset into something. They're not the typical turkey, so to speak, that's coming out of these junior markets. They're just flipping stock and options and making whatever they make. And these guys are locked up. They're insiders. So a lot of times I'm not going to question someone like a Bob Dickinson, who's the Hunter Dickinson Group. When I looked at a deal that we did together, he owned 50% of the company reporting. I mean, he's not flipping the stock. So he may be wrong about the geology, but he's made lots of discoveries before. And I'm not going to question him as long as he's locked in and I know he's got to get to the other side of the lake to make any money, then I'm happy to be in the boat with him.
What do you look for when it's maybe not a seasoned management as like a Hunter Dickinson scenario? If there's someone up and coming new, I mean, what is it that you look for? Like strong seasoned board advisory seats on there, like a really good geologist as a jurisdiction, or if someone's looking at new talent?
Yeah. Mostly I'm working with people that probably have done, have made a discovery before or built and sold something before. But a good example would be a company like Headwater Gold, which is a prospect generator. It's run by Caleb Stroop. He's in his early 40s. He worked for some major mining companies. He put a prospect generator together in bad markets and kept the structure very good. His management team and him own 30% of the company. He's an up and comer. I'm betting that he'll be able to make a big discovery with his company. So I recently financed him, and Rick Rule came in as a lead order with me. I introduced it to him, and again, I'm very happy with how that company's developing. And he hasn't built and sold a company before. He's only in his early 40s, but he's worked for the majors, and he's put together a tremendous prospect generator. We'll have to have some luck, but we've got 2 or 3 majors that are drilling for us right now on those projects, and I got my fingers crossed.
And they've done extremely well, so I feel it's a safe bet at this point. When you talk about some of your strategy, do you look at like spreading out over different commodities, or do you look like more for just like an exploration story, or how do you diversify for your portfolio in the commodity space?
I typically have a dozen companies that I own a large number of shares in. Sometimes it's more in a bull market, sometimes it's less and not such a great market. But yeah, I'd like to have some different commodity exposure. But I'm really about share structure and people. So if it happens to be that all 8 of those companies are copper companies because they're well structured, good people that have made discoveries, but I don't want to be too much into it. Wouldn't be 8 copper companies. But right now, I think I've got 4 what they call prospect generators, which are people that farm out their projects. They don't drill them themselves mostly. They're hybrids. They drill some, but they mostly farm it out to other companies to spend their money and they can earn into that project, but it's less dilution for shareholders. So 25% of my companies are prospect generators. I probably have another of the other 8 companies. They're actually either brownfield, which means they're looking for something where there was a mine before, or some of them are pure exploration. I have a pure exploration company, but the gentleman that runs that made 2 multi-million ounce or 3 multi-million ounce discoveries over the last 15 years in prior companies. And that's Almanix Minerals is his new company, and he owns his own rigs. He's got 20 million in cash, and he's going out to make another discovery. There's no, besides his geological knowledge and the fact that he's made these multi-million ounce discoveries before, I'm betting on him. And so again, I have a uranium company, but I don't try to have a full basket of every commodity. I'm looking at share structure and people.
When you talk about share structure, do you look at, I know Australian companies, they have wild share structures. Do you look at do you look over there, or when you say share structure, are you more referring to like the insiders, the people behind the funding? Like, does it matter if they're a wild share structure like that?
And I don't finance a lot of Australian companies, not just because they do have a lot of shares out, but again, it's a very transparent market in Australia. You can see who the sellers and buyers are, unlike the Canadian market. So they have people that specialize in that, and Australia is a big mining jurisdiction. I do happen to have 4 or 5 of my companies right now are actually run by Australian geologists. Projects are listed in Canada, but a good example was that, just recently I looked at a company called Kincora Copper. I stumbled on it. I was on a website called Resource Stock Digest. The CEO, was a very interesting guy, and I could see where their problems had been. They didn't have a good share structure, close to 300 million shares out. So I went to him and said, look, I'd be willing to finance your company. I like what you're doing. You've got $110 million in potential project partner funding, but you're never going to get out of your own way. You're stuck in this thing. And I said, but if you're willing to roll your stock back, I'd be willing to finance you. And that was another deal. I introduced my old mentor to Rick Roll, and he came in as a lead order. And that's, so that's an Australian, it's a dual listed company in Australia and Canada. So yeah, but I typically stay away from a all Australian listed company only because I don't have a network of people and connections in Australia. And so if I do something in Australia, it tends to be it's listed on the Canadian exchanges or it's dual listed like Kincora in both places.
Is part of your investment strategy jurisdiction as well? I know you've mentioned a couple of the companies that you participated in, but is it mainly like North America based? Do you look at like Latin America or different areas, Europe as well, or are there places you don't go?
Yeah, there's places I don't go, but there's people that do very well there. It's just not, I haven't had great luck and I don't understand those jurisdictions. So I don't do very little investing in Africa, not because it's not well, plenty of minerals and plenty of people have done very well. It's just I haven't had a great experience like 25 years ago. So yeah, but I tend to focus on North Canada, North America, especially in this environment with the U.S. government wanting to have more assets in friendly countries. South America, I've done a lot of stuff in. Mexico has been very good to my investing over the years. It's gone through sort of a spell where it got very difficult the last 5 years. I see that changing right now. I've seen a couple companies get their permits recently, even for open pit mines. So I think Mexico, a lot of people have been avoiding it. I think that's starting to be on the upswing again. I do like European countries. I've invested in Finland, Sweden, Norway, a couple other countries I can't think off the top of my head, but yeah, mostly I'm North America, South America, and I don't do a lot in Asia as far as investing in any of the exploration companies that are doing stuff there.
Speaking of Mexico, I know you're probably referring to Silver Tiger with their open pit mine, which was pretty exciting news that they got
Yeah,
that permit. And it's obviously we met through Kingsman Resources, which I'm a big fan of, and their sponsor on the podcast. What made you choose? I mean, obviously I love them for their share structure, and Scott is fantastic, but how did you connect with them and why did you like that story?
I met Scott again. Scott's had been in the business, but I didn't know him. But I met him through some other people. Michael Hudson. They're out of the same office. Michael ran a rare earth company 15 years ago that we did very well in. He also started Southern Cross, which we've all done very well in. Came out 4 years ago at $30-40 million market cap, and he just raised $100 million at a $1.8 billion market cap with a tremendous discovery in Australia. They introduced me to Scott. Scott had this idea. He put this Brownsfield district back together in Mexico. He was finishing that up. The company was really a shell, but he put these things in post-COVID. He'd been very methodical about what he was looking for. And I liked silver and I liked the district in Mexico that he was in. So I agreed to finance the company. And I've participated in every financing Kingsman's done. And they're doing one right now. And I'm participating in that one also. And still own all my shares prior financings. What I like about Kingsman is they're drilling. Their belief is that the silver mine that was there in the 40s and 50s is much bigger strike length basically, and that back then because of the silver price they didn't drill under the water table, and that's what Scott set out to do. So we've had our first drill result back, which was really quite good, showed that the silver does extend under the water table. And this is a big strike length, and we'll probably have 10 or 11 more holes coming out here. And like I said, he's raising another $4 million right now to mount a 12,000 meter drill program. And I like Brownfield's project. I like silver and I like Mexico. It's underground. And Mark, I can't think of Mark's last name, who's on the board, was with Los Gatos, which sold the first Majestic. He was a lead geologist there for almost $1 billion. That's right down the road in the same district or the same area, this silver area in Mexico. So again, there's a lot of things. Kingsman's high risk, but I think he has an opportunity to really develop a pretty big silver mine. So great share structure. Even after this financing, I don't think they'll even have 30 million shares outstanding. And there's 4 or 5 of us that own quite a number of those shares that are very patient. And, to make a difference to us, we need to see it really develop. So.
As far as I know you said you started close to the bull market. You had a mentor, Rick Rule, which is, a great way to start. What are some of the questions that you used to ask then or ask yourself as an investor, and how have they changed now with the experience that you've had? being in the market? Like, what do you usually ask yourself before you look at investing in a company?
Yeah, I've sort of picked up from different people over the years. I have my own mythology now, basically. But like you said, Rick has been a great person to watch and learn from. I had a gentleman by the name of Bob Bishop who wrote a newsletter for a long time that was helpful. There's been a lot of guys that have been helpful to me over the years. Bob Bishop, Jim Dines, Adrian Day. These are guys I work, and they're still, Bob's retired, but Van Simmons is a gentleman here in the States, a big metals dealer. And again, of course, I have to mention Jim Dines because Jim Dines was a legendary newsletter writer who's passed away, and he was a good friend of mine for 14 years and taught me a lot. So I've kind of taken pieces of everything that I've learned from people and come up with my own thing, but it comes down to sheer structure and people. So that's really what I look for. I realize that there's a lot of things I don't know, but I do understand sheer structure and people.
What are some of the like things you've learned, I guess, the hard way in resource markets through junior? Obviously, we're talking about junior miners a lot of the time.
I think the main lesson, again, if your listeners aren't in the junior resource market, this is a very high risk arena. If you're interested in gold, you should be buying physical gold. If you want to invest in a stock in your retirement account, it's your 401k or whatever, you're looking at Barrick, Newmont, Agnico Eagle. This is down the chain. These things can really perform well, but it really shouldn't be your whole financial pie. It should just be a slice of your financial pie. And again, you need to get good advice. So my first advice to people would be, again, it comes down to people again, but find a good broker, find a good newsletter writer that has a good track record that you can follow because you're not going to be doing this full time. I do it for fun now because I enjoy it, but I'm still working full time. So find someone that you trust that has a good track record that can guide you in that business. The other thing is, never believe your own. Never drink your own punch. A lot of people I've seen over the years, and even professionals, they'll be all in. And at the end of the day, Jim Dines had a saying, Mr. Dines, rich or poor, it's good to have cash. Meaning, don't use all your cash just because you think gold's going higher. Don't put all your money into gold. So, I caution people that you should be a slice of your pie, and you're trying to make an outsized return on these junior resource stocks relative to your bigger piece of your pie, which is invested more safely. So, but again, take some money off the table. Don't be greedy and don't find yourself in a position where liquidity becomes a problem.
Jeff, as we come to the close, do you want to give any closing remarks for what you see for, when the next dip is, what you think investors should pay attention to if it looks and feels like we might have a possible 20 to 30% correction in the markets generally overall as everything's looking a little overpriced. What do you give as their advice for as that time comes for the junior mining market or commodities
Yeah,
market?
yeah. Predicting things, it's easy to predict what things that are going to happen. Putting them on a timeline is where it gets difficult. So absolutely, there's going to be a correction in the overall financial markets because they're extended. But and I see that as like a rain delay. If you put it in baseball parlance, there's junior resource markets early on in the game, but you're going to have a big rain delay. So I don't personally see that coming in the very near term, but again, I don't know. I think we'll have a couple minor corrections in the resource market during this bull market, and probably a bigger correction. But I think if you look out, you're going to see that prices are much, much higher than they are now. So, but again, if you're not worried about the liquidity and you're investing in good people and good share structures, and they make a big discovery or develop their asset, you're going to do well. So, but again, don't find yourself in a place where you need to raise capital real quick if you're in the junior resource market, because there can be periods of time where it's hard to sell things. So.